Hi, everyone. Welcome to YXC Insights. Today is a webinar mostly focused on the pre-earnings stocks, the stocks that have earnings coming up this week. And we're also going to do a preview of the non-farm payrolls that's coming up on Friday. And I think could have a potentially significant impact on the market sentiment going into the election. So let's start with the current state of the market in the macro. So we're seeing rising inflation expectation driving up the 10-year yield in the past 1 month. And it actually started before the 50 basis point cut of the last FMC. Initially, I think a lot of it was driven by the Middle East conflict, which drove up the oil prices. But as we see going into the mid-October, oil prices actually dropped because the conflicts didn't escalate as much as the market previously expected. But inflation expectation and the 10-year yield still kept going. So what explains this? I think the market has started to price in a Trump victory, and that's also reflecting the betting market. Basically, the market thinks that Trump's tariff policies have a very high inflationary impact on the economy. If you raise the prices of imports up, that will drive the price of goods as well. And also, Trump says he wants to lower taxes as well. So that will have a positive impact on earnings per share, free cash flows for companies. But again, lower taxes means more spending power, more consumer spending, which again could drive up inflation. So the market essentially is pricing in a Trump win and is also pricing in the consequence of his win, which is high inflation from his policies. Now, will Trump actually do it? I think at this rate, if Trump does really implement as much tariff as he says, the yields could go even higher, and that would destabilize the treasury market. And the government will have a harder time issuing new treasuries at a lower cost, which is not something Trump wants to see. Trump ultimately wants low interest rates, which is why he has a problem with the Fed or Jerome Powell while he was a president 4 years ago. So I think there is a backstop mechanism arising from the market, but in the meantime, we still have a lot of uncertainty, and so the market is front-running Trump's policy a little bit. Is it stretched? I do think so. A lot of the move has been done, and we're in the termination zone of this move. So TLT versus USO. So as you can see, there is a largely inverse relationship because high oil prices drive inflation expectation, so which will drive higher yield, and that means lower bond prices. So you can see, largely speaking, when oil prices are low, TLT is high, and vice versa, except for recently, as I mentioned, since mid-month October, oil prices have dipped, but TLT has also dropped. So for the past 2 weeks, USO has been a poor hedge for TLT, or vice versa, depending on what your main trade is. So they're both falling down, which is not really good for our trader setups. But I do expect TLT to start bouncing here, essentially. Okay, so what's market pricing in now? So before the September FOMC, or on the day after the 50 basis point cuts, the market priced in a terminal yield at 2.75%. And the market thinks we'll get there by Q3 next year. Since then, we've had 10-year yield rising sharply, the yield curve steepening massively. And now the terminal yield is at 3.58. So between 3.5 and 3.75. This is almost 1 whole percentage point, or at least 75 basis points above what the market previously priced as a terminal yield. And essentially, what the market is saying, we'll see 3 cuts out of the next 4 meetings, and then just 2 more cuts after that. I think this level is quite high. Looking at the US non-farm payrolls, just a quick recap. We had a sharply rising unemployment rate between, I would say, between beginning of the year to July. And that essentially breached Stamps rule. Stamps rule essentially states that if the 3-month annualized unemployment rate is 0.5 percentage point above the 12-month low, then we are already in the recession. So we breached this rule around July. But since July, we actually had unemployment falling and 2 pretty good, I would say August probably not that good, but September was a blowout in non-farm payrolls, jobs added. A lot of them coming from the government sectors, etc. But still, it paints a picture of a solid labor market, essentially. And I think people tend to forget that non-farm payrolls can actually be negative, net losses of jobs. We're nowhere near that. We are having consecutive net jobs added, and we've had that since essentially end of COVID. So the economy is still in an expansion mode. And I think that's why the market is comfortable pricing in high interest rates currently. But looking at the October, this is the most important chart going into the non-farm payrolls. And we've relied on this chart since the beginning of the service, and it's been pretty accurate. This essentially is a mapping out the relationship between the change in initial claims versus the change in unemployment rate. So these are secondary effects. We already have the initial claims data for October, and we see that the initial claims went up quite significantly in October. And previously, when initial claims go up, unemployment rate tends to go up as well. There are some odd months where this is not quite the same. That relationship didn't hold, but generally speaking, the initial changes in initial claims and unemployment rates move in the same direction. So I actually think that at best we're going to have a flat changes in unemployment rate, but I think there's a risk of rising unemployment rate. And actually, in terms of the economists' predictions, they think non-farm payrolls will add another 6 figures, but unemployment rate will stay the same. And I think that I would be cautious on the upside of the unemployment rate. It could start rising to 4.2, which then will reprice this yield curve, I would say at least 25 basis points lower, if not 50 basis points. So, and that could be turbulent for the stock market going into the beginning of the month, which also coincides with the seasonality, intra-month seasonality of stocks recently. So what we have seen is a trend of stocks falling just around the non-farm payroll, either before or after, at the beginning of the month, and then rising into the CPI prints, etc. So I would just be a bit cautious about Friday's print in terms of positioning. And then, of course, next week we have the election anyway, which brings even more uncertainties. Now, let's move on to the earnings stocks for this week. We're going to do this in a chronological order. So starting with the names we've already covered, but that are coming up first in the earnings. And then we're also going to briefly look at the price actions of the names. We haven't done fundamental analysis, but we have covered it just in terms of technicals before. So let's start with Google. I think Google, essentially, the market is still a bit cautious going into the earnings. It feels undecided, but maybe with a bullish bias, you could say. If we just zoom in here, we didn't quite break above the wave 1 high or this green offset above the VWAP that previously has been the resistance. So we essentially, we haven't broken above the resistance. And that always leaves us with room for Google to fall lower for deeper retrace for wave 2, to complete the wave 2. But I would say on the margin, the sentiment is a bullish one. We're above the significant volume profile over here on the right. That's indicated, and we're also above this initial VWAP from the July high. So on the margin, the average market participant is in profit. So perhaps they're just waiting for the earnings to give them the catalyst or the permission to go much higher. And I think once it does go higher into this wave 3, it can travel really quickly, because a lot of volume has traded down here to build out this space, which supports the name going higher. Previously, I did think Google had a tendency to break lower. I think that probability is slightly smaller now. Compared to other stock, Magnificent 7 stocks, the valuation looks okay alongside Amazon. So I think the fundamentals aren't really a big concern. We'll cover the fundamentals once the results come out. ARCC, this is a BDC. We don't have a trade set up because we haven't really got quite a good retrace from here. But I think overall, the name should be going higher. And that just means ARC will command a high premium to its NAV. So for all the BDCs, I map out exactly where the NAV is. And then you can see relative to NAV whether the name is trading in premium or discount. So I think in the medium term, we should be heading towards above 22, but that's not that far away first. And we haven't really had much of a retrace from here. So I'm not really, I'm a bit indifferent going to this earning. I'm trying to do a play. I think I'm quite neutral at this moment, essentially. We could see a pullback, and then as we meet this wave 3 high here, the market could want to do a pullback. Also, we're at 1.618 extension towards the lower 21 area before it heads higher. I think that's well possible. So for me, I'll do nothing for this name. Coinbase is interesting because Bitcoin is essentially at the all-time high. Well, it's very close to the all-time high now, but coin actually is still hovering just around the VWAP of the April high. So I think Coinbase hasn't enjoyed as much momentum as Bitcoin, but when it does get going, it will travel much faster. And I actually see potentially much higher upside from here for Coinbase than Bitcoin itself. And part of the reason Coinbase hasn't outperformed just yet is because it's a halfway house between Bitcoin and Ether and other altcoins, which command a significant volume on the Coinbase exchange. So I think Ether hasn't really done that well in the past few weeks compared to Bitcoin. And once the altcoins start to catch up, as investors rotate out of Bitcoin to take profit and then put it into the altcoins, I think we can see Coinbase really outperform, really get going. Hercules Capital, I think fundamentally I was a little bit skeptical on this name, but I'm just looking at the price technicals now. We are massively above the NAV, so so investors have to pay nearly double the price of the NAV for this name, which is quite steep. But in terms of price technicals, it actually feels like it could go higher, as ridiculous as it sounds. So I've got wave 3 at 30. It's not a high conviction setup for me, but I think I wouldn't fade this stock now. So essentially, I wouldn't short it, and I wouldn't be surprised if it goes higher from here, essentially, in terms of price technicals. Meta, I've been patiently waiting for a further retrace into the VWAP here, and that would be a nice setup for me, 540. Could we get this on earnings day? If it gets there, I'm definitely a buyer on the margin. But given how, so essentially, I'm not that optimistic we'll get this pullback because first, the wave two has been quite deep, which means the wave four tends not to be that deep. It can be quite shallow. So we might have bottomed over here already before getting to 2670 area. But at this price point, it's hard to see a high risk reward setup. I think you could try for this wave 5 high, which is only 15%, and put a stop loss here at this VWAP as a support. But for me, that doesn't really scream a big risk reward. So I'm just going to let the stock play out. If we get a pullback, I'll get in. If not, I'm happy to just let it go. Microsoft. Microsoft, essentially, I think on Friday I mentioned that there's a big gap between where the wave below is, if that's bottom, and where wave C is. On the margin, I'm actually bullish in the sense that I think it hasn't really completed the wave one of this wave C yet for me to even put a structure of the path ahead. So I think the earnings could give us that wave one high. And how high could it go? I think we could break above wave A here after the earnings, and we could get something like 1, 2, 3, 4, 5. For in terms of structure, and which will be a really nice setup for us if we get a wave one high and then we just buy the pullback. If on the earnings day it breaks below this wave B high, then there's then the alternative bearish count would kick in, and that will give us a wave C down in the mid 300s. And again, that will be something I'll be very cautious of. So which way will it go? I'm leaning towards bullish right now, but if we break down below this wave circle below, then I will really get out of the way. So currently nothing to do, just wait for the market to give us the signal essentially for now. Apple, I actually think Apple has a more bullish potential straight away off the earnings. And it coincides, I think I saw a tweet yesterday or this morning that Tim Cook saying the Apple Intelligence is out and people can start using it now. And I think going with that and then the earnings expectation and the earnings call will be very heavily focused on the expectation of Apple Intelligence and the feedback it gets and its rollout plans, etc. And that could get investors quite excited. What I think is that we're in wave 3 already. So for me, I have a bullish bias for Apple. But if it doesn't really if it doesn't meet the expectation, then Apple shares are quite expensive given it's essentially on a flat growth rate. And this level of valuation multiples is probably not justified. So I would really be, so if I were to put on a trade now, I would really have this wave 2 low at 213, which is 10% below the current price as a stop. And if it breaches this stop, I would just reassess the chart and look at the fundamentals and the technicals together to see what the potentials are. But at the moment, I think the price action is quite bullish and has momentum on its side as well. Amazon, I spent quite a long time looking at this Amazon chart, and I think we will have. If you look at how it's come up from the Jan 2023 to now, the price is really traveling within this range-bound channel here. And essentially, it's been consolidating since April. It tried a breakout above 200. I think Jeff Bezos was selling at that point. I don't know what for. And we couldn't break above, and then we built a wave B low here. So it tried the upside, it didn't work, and then investors started selling. And now we've built this wave B low. I think we're ready to start reaching out for this wave C. We're above the VWAP from this August 5th low. So the average market participant is in profit. There isn't as much pressure for selling. And also just from that July high, since the failed breakout, the most traded, we're sitting on the heaviest trading volume profile here. So I think on average, the volume profile and VWAP do provide a good support. What we could see is that what I don't like about this chart is that I don't think we've got a sufficient wave 2 pullback, essentially. So I do feel this is quite shallow, and I feel the same way for Google as well, which is why I've been reluctant to put on a trade setup for both names. So I think if we do get a pullback here, it's a buying opportunity targeting this wave 3 high. But otherwise, I think clearing above this with one high signals bullishness, and then we can maybe use this VWAP as a higher stop loss instead, rather than just waiting for the pullback. So I'm not going to do anything pre-earnings. I'm going to see what the market wants to do after the earnings. We might miss this, but actually, if we miss this 5% here, and it clears both this high and this wave A high, that's actually very bullish price action for the stock. It signals that wave 3 is already on the way. So essentially, we're trading off maybe less potential upside, less profit, but for higher probability. So right now there is high upside for lower probability, which is why I'm willing to wait either way. And I think you have to judge what you're comfortable with. Are you comfortable with higher risk, higher reward, or lower risk but potentially lower reward as well? So we're going to go through from those names onwards. These are market cap below $50 billion, which I have put as a kind of like a border for what we're going to cover fundamentally versus technically, or alternative sectors, which would be crypto and Chinese stocks. And for those names, I will do market commentary and technical analysis, but I'm not going to put trace up for that because, and the reason is that I just haven't done enough homework on the fundamental side to give me the confidence for trade setups. So I think ICE has run into a wave 3 high here, and it has enough extension to say, okay, this wave 3 is probably done. And for me, this wave 3 is at above the 2 extension of wave 1 already, which is quite stretched. So I'm bearish for this earnings in the sense that I think we'll get a correction and pullback for after earnings. MSCI. So we're heading towards wave 5 right now, and we haven't quite broken above wave 3. So this, if without the Elliott wave stuff, you can just see that this is building a cup and handle structure. And I think the question is how deep that handle can be. And I really like it when the classical analysis and Elliott wave theory kind of go hand in hand. So from Elliott wave, so I'm just literally joining this slide for the first time. I think this 1.618 extension is a quite big resistance, and typically wave 4 would get a pullback between 1 and 1.236 Fibonacci levels, so between 557 and 578, and then before we get the final leg up. So for me, I think that is we are likely to see a pullback after earnings as well. CBOE, in the grand scheme of things, we're heading towards the wave 5 high of 280. But it would feel like we are having, we're probably at a resistance level for wave A. And this is because if you think of wave A as 3 waves, and then the subwaves, wave C is essentially, I think, essentially here. It should be a 1 or 1.1, between 1 and 1.38 extension of wave A. So they should be fairly similar in length. So that does make me think that we will have a pullback as well. And I think those, all the exchange businesses should essentially see a pullback in this reporting cycle. And then before we head higher to finish the wave 5s. RIOT is a chart that doesn't really get me too excited either way. And essentially since IPO, it's been trading in a very range-bound manner. And if we can essentially draw a sort of a channel here between the high teens and low 50 or high 40s. So I think for me, there isn't that much to do here. I'm quite neutralish. It could try to test this resistance again. On a fundamental level, if Trump does win, he's gonna put even more tariffs in place for the EV imports. He explicitly said that on the Joe Rogan show. And the broader structure looks like a WYZ structure. And this is basically a string of ABC moves, 3-wave moves up and down. And it doesn't really have a directional bias. RIOT, I flagged this in the chat recently. We are at a critical level here, essentially trying to break above the VWAP. It's attempted once, and it didn't really succeed. It fell back, and also there's a heavy volume profile building here. Essentially, what the market is saying that the market was pretty much underwater since essentially since February. We are at a point where it's called break-even supply, to borrow someone else's term. It's not a term I invented. Essentially what it's saying is that the market was underwater a lot, and they're now at the point where they're just about to break even, or they are break even now, and they want to just get rid of the bags. They want to just get rid of it's being psychologically painful. We traveled all the way down here to 6. It's bounced back more than 50% from there. Let's just get rid of it. And I think that is a very big psychological hurdle for a lot of investors to sell at break even, back hold when it falls. And so I think it really has to push through this resistance level for us to get reliably bullish and to get to this wave C. Mara looks better technically. Because it's been a much more constructive since this wave 5 low in December 2022. And I think I'm just looking at this structure, and I think we're in the wave C of wave C here. And if you look at the way these waves work, each leg has been very similar in length. So I think for me, the target was 56. But first, it really has to clear this trend line here. But when it clears this trend line, it would also clear above this volume profile too, which will be bullish. And if I'm just looking at the VWAP, so we're still below the VWAP from this wave A high from February. So most of the market is still nearly break even, but underwater. So until it decisively breaks above this VWAP and this trend line as well as profile, I would be a bit cautious in terms of the near-term setup. But on the margin, I think both RIOT and Mara should be having their wave Cs underway once they break out. CIFR, CIFR mining, it does look like it's approaching its wave C high, and that is, and we have one more leg to go on the downside. So I'm cautious going into this earnings in that sense, and this wave C could land as low as below 2. Overall speaking, I think that the broader trend is quite constructive, as again from the December 2022. It's just that I do think that we have largely completed the 5 waves ahead of the other names. So wave 3 here, wave 4 low, and then wave 5 at a 1.76 extension, which is a very standard. These are all very standard earlier wave levels, which is great. And I think, and the reason I think this is a wave B rather than a wave A is because of the nature of this this move. It looks like a 3-wave move here. What could change my mind is if it decisively breaks above this wave high, wave 5 high at $8. Until then, I'm basically cautious for the upside. Finally, iron, it rose 17% in one day, which is a breakout. So just looking at iron, we are flagged that if iron breaks above this, breaks above 10, it has entered the breakout zone. And I think we have now. And so probably in terms of momentum, iron has the best momentum already. The market is above the break-even level already from the July high, and also most of the traded volume profile is behind us now, so that would act as a support. So I think iron is probably is now going probably in a more direct fashion to 33. So I think that's it for the update today. Thank you for watching. If any questions, please ping me on Slack. I will give you the chart update as usual. Thank you.